Hey everybody, welcome to another episode of Selling Life and Annuities with Gordon Marketing. I'm Randy Pearson, Vice President of Life and Annuities, and today we're going to be talking about long-term care and annuities.
So, when I think of long-term care, Clayton, I think of too expensive, people can't afford it, and people don't get issued, right? It's tough to get a policy. Yet, I think everybody can agree you need it.
Absolutely, you need it, Rebecca. So my thoughts are traditional long-term care has virtually disappeared.
Right, I agree.
It's antiquated, it's outdated, it's very expensive, it's use it or lose it. What I found is 7 out of 10 seniors are going to have a long-term care event in their lifetime, but yet maybe 2 out of 10 have that type of coverage. And so in today's changing market, an annuity product could actually be the way to go with income doublers to supplement long-term care and home health care costs.
Okay.
Yeah, and what I've found in my travels around the country, that it really surprises me how many agents out there don't realize that either through a life insurance chassis or an annuity chassis, they can solve this long-term care issue very effectively and efficiently. Wouldn't you agree?
Absolutely. So if you have a client with a lump sum of money, whether it's qualified money or it's non-qualified money, ultimately you can dump it into an annuity product, no underwriting, which we'll cover here shortly, and at the end of the day, there's triggering events that can produce double income streams for a set period of time, if not for indefinite time, just depending on how your indexing produces returns.
So you just mentioned that if a client has a lump sum of money, they can put it in this product to solve their long-term care requirements, but can they use qualified funds to do that?
They absolutely can. Wow. In any annuity product, yes, you can use qualified funds to still supplement and double income for long-term care costs. At the same time, there's even a life product out there with a particular company that will also still accept qualified funds. And through the Pension Protection Act signed by law by President Obama, ultimately those qualified funds can still generate income for long-term care.
When you talk about a lump sum, what is a lump sum? Is that $2,000? Is it $200,000?
Ideally, $200,000 would be great, but no. Essentially, $50,000 is an ideal. Is
that about
number.
an average?
That's
a good start?
50 to 100,000 would be a good starting point, and it doesn't even have to be a lump sum. You can have that consumer that pays over time into specific products, but as long as you have an income rider, you will be okay. Specifically, if it has a doubler built in.
So once again, let me get this straight. So what you're saying though is with the annuity options here, there are no underwriting issues that the client has to address?
None whatsoever. Now, there is one particular product with a carrier to where it asks about 5 health questions to determine if they're going to give you 2 times the amount that you put in for long-term care costs, or even 3 times. But with every other product out there, no underwriting whatsoever, especially for those uninsurable clients.
So what is the average cost for somebody to go into a nursing home?
So in my days of selling, I would talk about how it was roughly about $8,500 a month for a private room in a nice facility. And if it wasn't for long-term care, when my grandmother was diagnosed with dementia, it would have bankrupted my family. And so luckily, she had gotten a policy years back when she was quite a bit younger in perfect health. But if it wasn't for having that kind of a long-term care income stream, my family would have literally been broke.
But with this program and a lump sum, you're saying that we can put it in a product like this.
And grow it until we need it.
And grow it until we need it.
Absolutely.
Huh.
Now, and I think I read an email recently that you sent out to some agents indicating that they can also get this benefit for their entire life, for the rest of their life, once they start receiving benefits?
So I have found that there's one particular carrier out there that has a performance-based income rider, and as long as the indexing growth is doing what it should be doing, while you still have a guaranteed roll-up rate, yes, I have seen where income streams will carry out with double income payments to age 95, if not longer, which is well past mortality.
So where are agents finding these clients?
So luckily, we have a lot of agents that work the senior marketplace. We have folks that are turning 65, aging into Medicare, and they may have a pool of 401k money from their employer. Perfect starting point. And ideally, the earlier you can get into this type of a plan, the more your money will grow over time to where you will have that much better of an income stream when you need it.
So is 65 a good time? Like what is that ideal time?
55 to 65 would
Okay.
be the ideal ages. Once you become over the age of 75,
Right.
this is not going to be an option to you.
You've lost some time. You've
Absolutely.
lost quite a bit of time.
How do agents find these opportunities?
Through fact finding, just sitting down, working the client, find out what they have, and see, do you have a concern that you may outlive your retirement? Do you have a concern that you may have a long-term care type of an event in your life? Most folks will say, yes, I'm concerned that I will outlive my retirement.
Yeah.
Well, I have products here that will guarantee an income payment you can't outlive.
Yeah.
And by the way, you got a concern for long-term care costs, we have these income doublers.
So look, this is all great stuff. So if you are interested in learning more about these products, these different annuity products, you need to hit us up in the comment box and with your name and number, and Clayton will be reaching back out to you, and we'll get you into the system and,
And he can
the
share.
training.
Yeah, and he can share with you what carriers that you can get connected with to market the products.
That's
et cetera.
good stuff,
Yeah,
because that's something as a younger person, I've seen nursing homes, and I'm hearing costs just like from my in-laws and how much things,
yeah.
and it is. I mean that's in the back of my mind, like, whew,
It's expensive. And
my
look,
kids better take good care of me is all I can say.
And look, for the first 10 agents that email me, I'll send you a free autographed copy of Bill Harris's book on An Insider's Guide to Bank CDs, Annuities, and Retirement Planning. So look forward to seeing your comments. Hope you email me, and thank you for stopping by.
Thanks, guys.
See you next week.